All right, thank you so much for having me here today. And I do appreciate the extra 5 to 10 minutes there. And if you have any questions, feel free to ask throughout the presentation. I'm going to try to do my best to answer all your questions. Today, we're going to be talking about that $1 million portfolio. And I know a lot of the people out there see that $1 million like so far away, but I'm here to close the gap on that. So that $1 million is so easy to achieve if you have the right tools and if you know when to begin. So let's get started with how to build $1 million portfolio while working full time. All right, so a little bit about myself. My name is Anka Metcalf. I'm the CEO and founder of TradeOutloud.com, and I'm a professional independent trader. I've been trading for over 20 years. I focused on day trading futures. I do it every day. I trade the power hour, and the rest of the day, I like to swing trade, manage my swing trades, scan through for some new trading opportunities, and also look for investing opportunities as well. I've been doing this, like I said, for over 20 years, and prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I have 2 programs that I run successfully. Trade Out Loud came about in 2010. The Stock Swing Trader is our oldest program where it's literally for swing trading stocks and active investing ideas. It is our oldest program, and we do have a transparent track record, so we could go to our website to find more details about that. And I do run a futures trading room. This is for income generation. So basically, you're looking to initiate positions and close them by the end of the day. So it's specifically for day trading, but we also have swing trading ideas as well. Also, we do offer trading education for stocks and for futures. I specialize in high velocity trades. So what this means is that I'm looking for confluence areas within the technical pattern where stocks and futures have the tendency to run faster and create that follow through. So that therefore, creating that impact on price, you're going to have less stop outs and more successful trades. I'm the designer of an institutional proprietary trading system. The reason I'm saying I'm the designer is because I cannot take credit for this, because technical analysis has been around for a gazillion years. But I base my trading decisions on price support resistance, on confluence areas off of the price support resistance. And I focused on 8 layers of price support resistance, so it's not just the linear supply and demand. I also, when I day trade, I have specific trigger times throughout the trading session, and I really focus on the beginning of the day. That is when the big impact, the big volume and institutions are coming into the market. And also, chart synchronicity and divergency is a must, whether you're day trading or swing trading or even investing. You want to put your money in an asset that has the power to run faster, right? Instant gratification. Who doesn't like instant gratification? For those of you that are very new and don't know me, you can find me on X, on Facebook, on YouTube, and LinkedIn. And if you have any questions, feel free to email me right here. My email is info@tradeoutloud.com, and my website is tradeoutloud.com. So here's our agenda for today. First off, we're going to talk about how to start making your money work for you, how to get into that $1 million. And if I show some examples, you're going to go like, oh my God, I did not know that. I'm also going to show you the best trading setups for explosive gains, right? So you are not going to miss a beat, especially now that we had a little bit of a pullback into the market. We have some really great trading opportunity, and I've been scanning a little bit just before this presentation here, and I did post some trading ideas for tomorrow for swing trading on X on my page. So that is, if you go on X, you will see under Trade Out Loud, you will see that I have posted a gazillion of charts right there. So best trade setups, like I said, we are into an environment where we are expecting a move into the market. We found some strength, and we also have some weaker stocks. So we're going to take a look at longs and shorts as well. I'm going to also be sharing with you focused timeframes for best returns, because everybody, and I get a lot of questions like, Okay, so your swing trading, what is your focus time frame? What time frame are you using? Where are you looking for setups? We just want to know what you're looking at. And this is what we're going to talk about today as well. We're also going to talk about the trade selection criteria, so how to scan for these trades. You don't really need a lot of tools to do that. And I do use some scanners. You know, it's not a secret. I have been using Trade Idea Scanner for, oh my gosh, for as long as I can remember. I think I was like number 20 or 30 in their company when they first started out. And I think that's sometime in 2005, if I'm not mistaken. I do use TrendSpider, so I do have my assistants that are working for me. Those two are my assistants, and the charts are my employees, okay? So also we're going to talk about how to spot mega opportunities even in the worst market environments, right? Because the market has been very choppy. And if you have been looking at a chart of the Qs or a chart of the SPYs lately, you have been probably, you know, looking at something that is like not going to run anytime fast. Because I was analyzing the Qs just before the presentation right now, and I actually determined that the Qs is literally at the same price point right now than that it was in January. So we're trading at the same level, even though it went back and forth, back and forth, back and forth. It didn't make really much progress. All right, so let's get started, everybody. All right, so $1 million sounds so fantastic to have in your portfolio, right? So did you guys know that if you deposited $7,000 in an investing account when your kid was born and simply invest in the S&P 500, by the time Junior is 65 years old, that is the retiring age here in the US, he would have over $1 million in his portfolio. And guess what? The best part is without touching that investment and never contributing another dime. Guys, I don't know about you, but this is crazy pants, right? But some of you guys may think that, you know what, when you're young, maybe you don't have some $1,000 laying around, right? So here's the good thing. If you don't have that $7,000 when your kid is born, how about investing $60 a month until they're 18 years old? I mean, when you think about it, it's $60 a month. That's not a lot of money, right? It's only $60 a month. Think about it this way. How many times have you gone to Costco or Walmart or grocery shopping and you basically bought like things that you did not need? Like, I'm guilty of that. I'm raising my hand right now. So basically, when you're thinking about these $60 a month, right? If you divide them by 30, guess what? You get $2 a day. That's your latte. That's even less than your Starbucks coffee. So it's fully worth it, guys. It's $60 a month. Then stop contribution. So at 18 years old, you're going to stop everything, right? You're not going to contribute to that account. So you stop contributing to that account and never make another contribution again in that account. So that's all your investment, $60 a month for 18 years. And guess what? When Junior is going to be 65 years old, he or she is going to get over $1 million in that account. Isn't that cool? I mean, come on, guys. So guess what? You could actually do better, and Junior can do better. With everything that we have at our fingertips right now and all the information that we have, trading being so accessible, investing being so accessible, we have access to platforms, to information. He can do better, right? What if they take over the account? And what if they're getting their first job and they start investing $200 a month? Guess what? By them investing $200 a month with an average return rate of about 8%, I actually decided to put a much lower rate of return because the average is about 10%. So at an average of 8%, your estimated retirement savings would be over $2.1 million. right? By the way, there was a research and there was a survey that was done by Legg Mason, and they actually concluded that every single individual that had accounts opened with them had felt that they needed to have at least I think it was $2.1 million in their account. Guess what? The average amount that their clients had in the account was $300,000. So that's a really big gap between $300,000 and $2 million, what they thought they needed to have in order to retire comfortably. Okay. So I have hope for you guys here, because now, even if you're in your 30s or 40s, there's still time. But I'm here to say that even if you're in your 50s or 60s or even 70s, you could still get there. That's right. You could still get there. And I'm going to show you how. I'm living proof, because I used my savings account to get into day trading 20 years ago. So I quit my job, took my savings account, and dove right in. Guess what? It wasn't very pretty at first, and it took me quite a long time. I would say about 3 years. So I was consistent, but I wasn't able to pay my bills. So I went very quickly through my retirement account, right? I went very quickly and consumed what was in that account. So guess what? My number one mission was what? To generate income. So that is what I did. I had my day trading business in order to generate income. Right after that, when I started being very consistent with my trading, I started allocating money for my swing trading accounts. And when I had a little bit more money to put aside, I invested. And what I did is I established a program for my investment. And it wasn't like gazillions of dollars per month. I started very, very, very slowly with $500 a month, $200 a month, and every single month I would contribute. And when I was at the beginning of my trading career, I didn't have a set amount. Let's say I'm going to invest $500 every single month. No, I was investing as much as I could afford, but every single month I would make contributions. So take a look at this image right here. How many of you guys, including myself, have been stuck in a cubicle? I know when you first, start working, and if you're having an admin job, this is where you are. And I'm here to tell you that there is so much more to life than this, and you can make it happen. So self-directed trading and investing is all about taking control of your financial future, managing your own money, because nobody can do it better than you. You're an account number to any portfolio manager out there. So it's time to make your money working for you. Here's the reason why I love swing trading. Swing trading means you're also generating income. You're also creating cash flow, and income is wealth, because when you generate that income, that extra income that you have, you're going to use it to pay off high interest credit cards, high interest loans that you have, just pay them off. You're going to use it to put some money aside, right, for investing for your retirement. And not only that, but for the vacation of your dreams, for some, I don't know, for a boat that you want to buy, or anything that you want to accomplish in life, maybe a new car, or, maybe you want to, study something else. So remember, this is a concept of the money magnet. Money attracts money. You do not have to be a math whiz, and you do not have to have a finance degree in order to achieve these results. And oftentimes these are secrets that wealth managers did not want us to know. Every year, stocks will move, and this is one very, very realistic. And if you have been in the market for some time, you probably know this. But for those of you that are very new or are just focused on day trading and not really focused on swing trading, well, this is news to you, because every year stocks will move about 20 to 30%, maybe more each year. And this happens at least a couple of times per year, and it happens in cycles. What? This is crazy pants. So literally what this means is that you can have a stock that is moving not only 20 to 30%, but it's going to move 60%, or 40%, or it's going to move 90%, and that's within the whole yearly cycle. Why? Because it moves down, it moves up, retraces, moves back up, retraces, moves back up. So when you're swing trading, you're capturing bursts of momentum within right after the pullback. So here's the chart of the Qs, and this is the chart that basically concludes right here in March. This was the beginning of March. I do have a chart that I can show you with the price action that we're at right now. But the most important thing is that from the January low, because we want to focus on those cycles, right? From January low, where we had the best pullback ever, because we had a 1, 2, 3, 4, 5 candle pullback. And definitely when you're looking at daily charts, this is what you want to see. You want to see at least a 5-bar pullback. A 3-bar pullback is not strong enough to build that foundation from which momentum burst can actually last for a very long time. You want to look for something a little steeper, like 5 candles into some kind of a support zone. And here you can see that we have a minor support zone because this bottom is actually rotating right here off of these prior highs. So this is a minor support. Minor support is a level, it's a support level that is present only in uptrends, and that can sustain along with a healthy pullback, a rotation that can last a little bit longer, so that you could see a much longer projection. All right, so this move from January all the way into March, and by the way, we're still coiling around these levels right here. This is an 11% move from January. So let me show you real quick, and I'm going to go right here into the Qs. This is the daily chart. This is the base that I was telling you guys, and in fact, if you can see where the price is at right now, 437, this is the prior high from February 12th, right? And if you look at the bottom right here, right, you can see it that from February we have been coiling all around. Yeah, we're going back and forth, back and forth, back and forth. And by the way, pretty cool reaction today after the CPI numbers came out. You can see a little bit of a green buildup right here. So this is actually very interesting and can build bullish above or bearish below. So it could be bearish below under $432. All right, so let's take NVIDIA, right? NVIDIA from January low until this high here in February, end of February, it was up 80%. What? Yeah, that's right. It was up 80%. The quarter was not even over. And so 3 months, in less than 3 months, you had a gain of 80% in NVIDIA. And by the way, when you pick these types of stocks, think about good, reliable stocks. Have in mind the Warren Buffett style, quality of stocks, selection of stocks. I mean, think about stocks that really have a good potential, that have good volume into it as well. And in general, stocks that make a splash into the market, that have new services, that have innovations, stocks that have the potential to continue higher. All right, so let's take a look at this example right here, because this is so interesting. We caught this one. This is a very strong stock, NW. You can see the beautiful breakout, the retest, the pullback. These are the pullbacks that I love, absolutely love. This is the buy here. Remember, the narrower the candle, the bigger the move, the smaller the pullback, the less of the move you're going to expect. And here we are making new highs. And by the way, bam, this red bar right here was caused by earnings, and we had a huge tape out right here. Earnings not very satisfying. However, think about this. Did you guys know that more than 93% of the market volume is algorithmic trading, and algorithms can't really read fundamentals? That's right. So that's why technical traders have the upper hand, and simple technical analysis is going to actually make the price rotate from certain levels. Take a look at when the pullback came right into the minor support level from these prior highs, and then right into the 200 simple moving average. And here we have, by the way, this is a daily chart. And here we have the beautiful information. This is the gift. I call it the gift. We had a beautiful inside candle. The following day, this is the long right here over the prior high. The stop goes below the 200 SMA. So really nice, tight setup. And our target was into these prior highs right here, okay? So all the way to these highs. Guess what, guys? Not only that the stock went up into the high, it went a little bit higher. So here you had the opportunity to trail into the 320 right into this peak right here. And I'm going to show this chart. So basically in 1, 2, and 3 days, 18% up. So remember at the beginning of the presentation, I was telling you guys that even if you're in your late 50s, 60s, or even the 70s, you still have time to build up that portfolio. Remember what I said about that 8% or 10%? Well, think about this, that 8% or 10% is in a year. This is in 3 days, and moves like this happen in the market all the time. Like literally, if you're using Benzinga Pro, I'm using Benzinga Pro, just look through the scanner and it's going to give you stocks that have performed and have the possibility to, overperform depending on their technical pattern. But if you think about this, right, even if you're thinking about that 8%, you have recuperated here. How many years, guys? 2 years. Right? 2 years. So instead of having your money invested in only one asset, you can look for these type of caliber swing trades where you can make 18% in 3 days. You can make 5% in 3 days. You can make 50% in 3 days, or you can make 5% in 3 days. So it's a matter of how the market is going to react. So things like this are going to happen always. Money managers and hedge funds live mostly off of our commission and fees, and we're just an account number to them. So if you have an RIA or a 401k, I think it's better to learn how to trade and invest or trade on your own, because you're going to have much better returns. I know I have. Right? So whether the stocks or funds perform or they don't perform, guess what? They're getting paid. Barclay Hedge reported that over the past 5 years, the average hedge fund in its universe produced a net analyzed return of 7.2%. Are you kidding me? 7.2%. So let me give you some more examples here. This is Costco. I love this stock. I'm a Costco shopper. Every time I go there, the parking lot is full. You go inside, it's a complete zoo. So what does this mean? And plus the gold bars, I just posted an article this morning on Costco selling gold bars, and it's becoming, quite a habit. And this is increasing their sales, and it's taking their sales to the roof. So what does this mean for me? Every single freaking pullback, I am going to buy this stock for long term. Why? Because I think it's going to go higher. Remember the expression, it goes to the moon, right? This is kind of Costco right here, okay? So Costco from January all the way to the beginning of March was up 16%. That's 16%. So think about if you have a basket of stocks, you don't have to have a gazillion shares, just something affordable for every single budget, right? And think about this, 18% in 3 days, then you have 16% in Costco, let's say in 2 months, right? Let's take a look at the next example, Amazon from January 1st, where we had that pullback. So remember, we just don't get in. I get in and ongoing trends at price rotations by pockets that are forming within the trend. And take a look at this, 23%. Well, 23%, if your fund delivers 10% to you, you've just made it in 2 months right here. In 2 months, 23%, right? So swing trading and investing is the easiest trading style to make money. Why? Because you don't have to sit in front of the computer. Stocks are more likely to hold because you're basing your trading decisions on higher time frames. Higher time frames are much more stronger and have the tendency to hold support or resistance a lot heftier than smaller time frames. So you're literally sidestepping the wiggle of the algos, right? Because algos are day trading. You have to be like a really phenomenal day trader in order to really create wealth into the market. But if you really want consistent wealth without a lot of headaches, swing trading is for you. But you need to know and you need to respect the rules of the game, and you need to be patient and wait for the proper setups, because it's not about the trade as much, it's about the risk and management. The risk is the amount of money that you're willing to lose, and you have to be comfortable with losing that amount, and it has to be a certain percentage of your account. Now, if you're a day trader, 1% makes sense. If you're a swing trader, then if you're a more advanced swing trader, you can afford as 3%. But remember, the risk per trade is not just, by feelings, like, oh, I feel that Costco is going to go higher because I love the stock. I feel like Meta is going to go higher because I love the stock. Or I feel that Intel is going to go lower because I really don't like the stock. No, it's not by feeling. The risk is determined by the difference between the entry and the stop, period. And now that you have that amount, now you have to see how many shares you could get depending on your size of risk. So why is it important to get started? Because the money that is sitting right now in our bank accounts is literally on fire due to inflation. So who is swing trading for? Well, if you're a busy individual, swing trading is for you. Have your long-term money and your trading accounts, you can manage them in as little as 5 to 10 minutes in a day. Part-time traders that don't want to sit in front of the computer all day. Swing trading is a wealth generation style of trading, just like investing. However, it's also a cash flow generation type of style of trading. All you need is an average of about 10 minutes a day. Why? To adjust your stops, to look at a chart, to look at the stocks that you're in, and scan a little bit to see what other trading opportunities are there. You get to work from home or anywhere with the internet connection. This style of trading, swing trading and investing, yes, you could do it off an iPhone, you could do it off a laptop, you could go do it on the go. Not day trading. In day trading, you need the real estate to see what the heck is happening in the markets, right? So you need to have a plethora of information before you take that decision to enter the trade. So with swing trading and investing, this is how you make your money work for you. So I'm going to tell you 5 quick steps on how you get started. Number 1, you got to open an account. Whether you open a Webull, Robinhood, Fidelity, Interactive Brokers, TradeStation, or Schwab, it doesn't matter. You do your due diligence, open an account. Number 2 is determine your risk and your risk tolerance. Typically the risk for swing trading, the average is between 2 and 3%. However, if you have a really big account, remember, if 2% represents like something crazy, like, I don't know, you have several $1 million in your trading account, you're not going to be risking $70,000 on your risk per trade. So that means that you're going to lower it down to your risk tolerance. Number 3, establish your game plan. Say, hey, what kind of strategy am I going to use? I need to have like a real good trading plan. Am I going to buy pullbacks? I don't know, 5-bar pullbacks. I'm going to stop for those on a daily chart. I'm going to stop for 3-bar pullbacks, let's say on a weekly chart. I'm going to hit the moving average. I'm going to wait for rotations. I mean, depending, or trade breakouts, or whatever your plan is, you have to lay it out entirely. Make sure you have your determined entry, stops, targets, because this is essential. And in fact, risk management and money management is the #1 cause of traders giving up trading, because they don't understand the concept. So you have to have a really good understanding of this. Number 4, create a trading universe. You don't have to trade all the charts, 6,000, let's say 6,000 stocks all at once. Probably just pick, let's say 50, have a trading universe of 50, but make sure you have a very diversified portfolio, a watch portfolio. So have financials, have home builders, have some tech stocks, have some defensive stocks, et cetera, et cetera. And then create a trading strategy. Is your strategy to trade the trends, try and counter trends? Yes, you could do that. Don't do that at the end of the quarter, because losing stocks are just, like worst performing stocks are just going to go lower. It's a window dressing thing, and it requires a lot more management. Anyways, stocks to trade. So create that strategy. So swing trading is the sweet spot between day trading and position trading. So it's kind of like in the middle. So that's why it's sidestepping the algorithm. So you're stepping away. You're not going to get confronted as much with algo. So you're going to stay away from the fleecing, right? That may stop you out of trades. It generates high probability trades, and it offers the best chance for success. Swing trading positions would be held for anywhere from 2 days to a couple of weeks, and it focuses on higher time frames, such as the daily or the weekly chart. And they're all based on technical analysis, no mumbo jumbo, right? We're not going to go like, okay, Mercury is retrograde and there's a full moon tonight, so we're going to base our decision on that. Even though, by the way, I have met some astrology traders that are specialized. They're not traders per se, but they're analyzing the effects of astrology into trading, and they determined that every single time we have a full moon, there could be a pivoting action into the market. So there could be a rotation that is happening sometime soon within that interval, about 3 to 5 days. Anyways, so swing trading is not about capturing the entire trend. It's not about reading the exact bottom or reading the exact, that is impossible. You can get lucky maybe once or twice in your life, but that's not really realistic. Swing trading is a simple strategy where you enter trades within when the price breaks above, like off of these pockets, let's say a long or even a short, and it's about capturing this core, this middle. So the key here is to know how to enter these swings in uptrends or downtrends, right? Because what do we do in uptrends? We buy bottoms, right? Even today in the market, in day trading, so when I was in my day trading session this morning, I looked at the charts and I'm like, okay, following the CPI numbers, the market was so super extended to the downside, but it was sitting on support. So what was the normal thing to do? What do you do in an uptrend when the price action pulls back to support? You go long. It was a no-brainer. So once you know the system, bam, you're on your way to making money. Take a look at this chart. This is something that we traded. We had phenomenal gains on it. We held it for about 2.5 months. In fact, this was the first trade that I called at the beginning of the year. And this was the breakout right here, right in January. The stock moved up and actually broke up above this. So this is a classic breakout off of the base. You buy the high because it was trading right here. And this was target 1, and then it's basic again, and you're looking for a second. It did like 2 or 3 breakouts. We did phenomenal on it. So it takes a proven strategy to select highest day trades, swing trades, and stock trades to invest in. So the stock needs to be fundamentally sound, medium to long term. Fundamentals have to be in line with technicals. Buy stocks that are on sale, right? On pullbacks. That's on the clearance rack, right? That are overextended, but that are still trending and they're still, you know, worthy. So one of the things that I like to look for is reasons into the market. So it's not necessarily valid, but let's say let's say, for example, we're going to hit a recession right now. Let's say, for example, we don't know that for sure, but let's say we're going to enter a recession. That recession is going to make you a millionaire. Why? Because that recession is going to provide you with so many trading opportunities. It's going to be off the charts. That is when in 2008, I made the majority of my stock pickings. And guess what? I didn't buy anything that was expensive because I didn't have a really big account. Because remember, I invested all the money that I had into in myself in order to learn how to trade. So I invested in a high income producing skill in myself. I invested a lot of money, 6 digits. And I'm talking about higher 6 digits because I needed to learn how to trade, and it was fully worth it. And after that, guess what? I have entered into the financial bubble. We all did. And that was where I started to invest. And like I said, I didn't have a gazillion money in my account, but I invested in Sirius Satellite. I bought it when it was at, I think it was like 15 cents, and I sold it when it was like over $6. That was really good. I bought a gazillion of shares back then. So I had JBHD, which was already a penny stock, and that went like to $15. So that was the type of, those were the type of trades that that's how I started investing into my account. And later on, all I did is like reinvest. So do you need like an event like the 2008 or 2016 election or 2020 pandemic or something? You don't. Okay, so you can start swing trading on any pullback opportunity. So don't fear that, but just wait for very clear signals. Here's another example that I have shared with my traders. This was an alphabet, and by the way, guys, this was in 2024 at the beginning. Take a look at this pullback, 1, 2, 3, 4 bars, right into the 20 SMA, rotation, and back up, back into resistance. This is the type of investing, this is the type of active investing patterns that you want to look at. So be in sync with the institutions. This is all I have to say. And when it comes to trading, no one has a crystal ball. It's just 99% technical. Remember, you're sidestepping the algos, but you're still getting the triggers from the algos from day trading that are producing the movement into the market. So my personal criteria is to look for stocks that are solid, that have good earnings, you know, quarter after quarter, year after year, that are solid, stocks that make a splash with new products, services, launches, etc. Look at the technical side as well, and also look at the sectors, how they perform within a certain sector. Take a look at Microsoft, and by the way, Microsoft is ready to create another buy setup. Microsoft from January until beginning of January till the end of January, up over 10%. Here's Microsoft ready to break out again here at the end of March. Number one mistake in trading: the traders that only look for stock picks are the traders that are going to fail, 90% of them, because you have to literally know how to trade. You have to understand the setup before you get in. So here are 10 ways to generate income. Let the chart do the talking, because the chart in the left-hand side of the chart is going to be your crystal ball, and that is going to tell you what you need to do. It's going to answer all your questions. If you haven't gotten to that stage yet, trust me, in a year or maybe 2 years or maybe in a month or two, you're going to get there. It's all about multi-time frame alignment. It's all about how you have your chart set up on your computer. It's that easy. Once you have the proper layout on your trading computer, bam, you're gonna have a big light bulb that is gonna hit. Look for relative strength and relative weakness, and always trade in sync with the market. One of the most important things that you need to do is do it now. Start now, because the biggest enemy is delay. Learn how to create wealth via swing trading and investing. Learn the art of charting. Learn investing to multiply your money over and over again. Understand the bow and arrow law effect. You guys know what the bow and arrow effect is? In order to take a step forward, so take a look. I have myself for an example. So I wanted to go into day trading. What do you think I did? Open an account and start trading? No, I invested in myself. So I lost money first, I invested in myself, and then I made that money back. So avoid the biggest expenses. Do you guys know what the biggest expenses are? Okay, that's a topic for a different webinar. Okay, some of the questions that people ask me: how do I get over my fear of trading and investing? First of all, I found a mentor, someone that had already achieved what I achieved, and I looked at my investor and I traded with him. I hired him to get me from point A to point B, where I wanted to be, fast, because I didn't have time to lose, right? I was in my 30s already when I gave up my job. Mindset, eliminating all the beliefs, right? All the limited beliefs that you're not good enough, that you shouldn't do it because you're going to lose money, okay? So just do it, guys. Just do it. Just get started. Get your feet wet. I do run a swing trading program where we call a lot of swing trades and also some investing trade ideas. It is $299 a month. If you want, you could go to my website and you could find that out. I don't have the link here. Okay, unfortunately. All right, so here you go. You go under services and you go under the stock swing trader right here. Okay, and you can read all about it here. I don't think I have enough time to go through it. I think my time is up. All right. All right, so I don't know if I still have, you know, a few more seconds left, but to go over the program. But in case you guys have any questions, you can email us at info@trailal.com. More than happy to answer your questions. So this is the stock swing trader. Has been around since 2010.
You have a few minutes here. We're still running ahead. And also, I put the link. I have the link, and it's in the chat.
Oh, I appreciate it. Thank you so much for the help. Okay. So basically what we do in the program is we scan for you. So we also present you with a lot of trading opportunities. We bring you all the trade setups. You will have access to a position size calculator because that is so important for consistency. We provide you market analysis. We also have a private X feed where we share our trade ideas and market conditions every single day. So it's not like you're getting a newsletter, for example, on a certain day of the week and then you're just left uncovered. No, so it's kind of like a babysitting program. So you're going to get a newsletter each Monday with the market analysis, with new trade setups for the trading week, with precise entries, stops, targets, and we have a performance portfolio where you're going to find all the trades with the entries, the stops, the targets, and actionable ideas. And also you're going to find updates on trailing, right? So what is the trade without trailing? So if we're raising the stop, if we're lowering the stop, if we want to add to the trade, that is when you're going to receive all the information. You're also going to receive information about sectors and, if we identify any sector rotations, economic calendar, and so on and so forth. Tons and tons of information. Basically, we're focused a lot on stocks that are accessible for everybody. So we don't only focus on stocks that are high priced. So we have trade ideas for every single portfolio. So we try to kind of like be in the middle. To be very honest, I really don't like to trade high price stocks. So as much as I love Broadcom and as much as I love some other stocks that are above $1,000, we try to find stocks that are, priced below $300 to $400. So somewhere in a range from, let's say, $10 to, let's say, $400. Just to be affordable, just to have something for everybody. Like I said, if you guys have any questions, feel free to ask us at info@tradeoutloud.com. We're then happy to help you guys out. You're going to find more information about pricing. Like I said, it's $299 a month and $29.99 per year. This is the most popular program because you're getting 2 months for free. This is where you're going to get the swing trading performance. And like I said, you could go back right here. These are all the different years. This is 2024. This is 2023. This is 2022. And you could scroll through each year. You could see the performance per each month. And remember, in the back of, in the back of my mind, when I look at percentages, when I look at gains, I think about 8% to 10%. Institutions do 8% to 10%. You could do much more than that. Even if you don't trade as many stocks, maybe you trade half of them or maybe quarter of them. But definitely you could see that the average return that we have is really, really impressive. So you could scroll. And I know that past performance is not indicative of future returns, but you could actually get an idea of how we do it. I mean, take a look at this. This is 2018. This is 2017, this is 2016, this is 2015, this is 2014. I mean, show me a service that has a track performance, a trackable track performance that dates like so many years back. So I don't know, do you guys have any other questions?